Hooty hoo, all my stock market gamblers. Welcome today. It's Friday. Made it till the end of the week. And what a week it was. Very strong for the markets. Markets are up again today. Dow up about 700 at its high. NASDAQ up about 300, having a very strong day. A very strong week we've had, right? We've had this run up now. But now we're hitting up to the resistance level of the 20-day moving average. And we have two gaps that are below us. We gapped up on Tuesday and we gapped up again today. Now, I personally am guessing that we're going to come back and fill those gaps. Has a bottom been made? Have we had the bottom? Did we make the bottom in the stock market last week? I'm not 100% convinced that we've seen the bottom yet. We probably have, but we could still pull back and come down to what I call, resistance level, the 200-week moving averages. If we come down and touch the 200-week moving averages on the QQQ and the SPY, that's where I think the bottom's going to be formed. They may do another flush of this market. Now, this next week is interesting because, it's the final week of the quarter, and they don't want to get a flush in this week. They want to push it higher. I'm not sure they can. Maybe we'll have a sideways week and then get a flush out. Now, the money still is to be made going higher. It's to be made going higher. Now, why did I take my positions off today? I took my long positions off, most of them anyways. I have a couple small ones on, but I took most of my long positions off because I'm expecting to be able to buy these positions back at a lower price. We're hitting resistance. We have two gaps to fill down below us, and there's still a lot of fear in this stock market, a lot of fear. Yes, we had a great week. Yes, we're up 700 points on the Dow today, but they could still make this market come back in. Now, next week's going to be interesting. The close of the quarter, maybe they do push it higher. I just think that I will get a chance to buy these back at a lower price. Now, I still think the money is to be made on the long side. Most of the easy money has already been made on the short side. I wouldn't recommend shorting. I mean, we were short from, January till June. That's a 6-month period to make the money on the short side. Now the money's to be made on the long side, but nothing goes straight up. We just went up 6% this week. I'm just expecting a little bit of a pullback to put my positions back on. That's just what I'm doing. You got your own opinions, but that's what I'm doing. Okay, so I want to try to tie this all together today. We got everything bubble, right? We got a bubble in the bond market, a bubble in the stock market, and a bubble in the real estate market, right? Now, how did these bubbles get formed? Well, they got formed because the Federal Reserve kept interest rates at zero for 12 years. I mean, that's how the bubbles got formed, and there's been a lot of bad investing going on, a lot of malinvestment, if you will, and I want to talk a little bit about that. Now, this year, IPOs, initial public offerings, this is when a business goes public. Anyway, 75% of IPOs right now are not making money. They bring them public and they don't even make any money. Now, we haven't seen 75% of IPOs not making money. You'd have to go all the way back to the dot-com boom. The dot-com boom back in 2000 where, they didn't need to make money. You just had eyeballs on the internet. You could bring your stock public, and 75% of those companies never made money, right? So we're in that same boat right now. 75% of the companies are not making money that go public right now. Okay, so what I want to talk a little bit about is how these zombie companies, now the zombie company is a company that while they don't bring in enough cash flow to even make their debt payment, okay, they have a lot of debt and they can't even make the payment on the debt without borrowing new money. So they can't borrow new money, they go out of business. And as money gets more expensive, because we're starting to raise rates now, Jerome's raising from 0% to 1.5%, and he says we're going higher. Now these companies have to pay more for money, so some of these zombie companies are going to start to go out of business. Now, before the pandemic, there were about 20% of the S&P 500 were known as zombie companies. Well, after the pandemic, like right now, it's up to about 40% of the S&P companies are zombie companies. They don't bring in enough cash flow to pay for their debt, so they have to keep borrowing money. Now, a lot of these companies are going to go out of business. They're going to go away. That's just the way it works. It's the survival of the fittest. These companies should not be in business. Some of them, they have great services, but they're starting to lay people off already. Things like Coinbase, they're laying off 18% of their workforce. Are they going to be around? Robinhood laying off off 10% of their workforce. Is Robinhood, the trading platform, is that going to be around? A lot of these companies are not going to be around. But what happens when these companies go away? Well, people lose jobs. Now, here's the thing. The Federal Reserve wants you to lose your job right now. Well, that's crazy, Mike. Why would the Federal Reserve want to take away my job? Well, they got to get inflation under control. Now, as an economist, there's this thing called the Phillips curve. And basically all it says is that as unemployment goes up, inflation comes down. It's an inverse reaction. And unemployment goes down, inflation goes up. That's the Phillips curve in a nutshell. It goes like that. Okay, so right now, the Federal Reserve would love to see unemployment numbers go up, and they're starting to spike up. I think we had 229,000 new first-time jobless claims. I mean, it's starting to spike up. People are starting to lose their jobs. Look at J.P. Morgan. They laid off 1,000 people. That's just in their mortgage department, but they're also laying off other people because they keep closing branches. I don't trust the banks right here because they're operating on such a thin line. They have to get rid of their bank tellers and close branches just to make money, just to survive. And they got my money sitting in there. And when I go in to take it out, a lot of times they don't want to give it to me. If I ask for $5,000 in cash or $10,000 in cash, they really get really disturbed about that. It's kind of funny. But okay, so they want jobs are going away. Tesla's laying off 10%. But when these zombie companies lay off people, a lot of the zombie companies will go out of business. Well, people will lose their jobs. And now this is good to bring inflation down. Now, how does it bring inflation down? Well, let's think about this. When people lose their jobs, they cannot make their mortgage payment, for example, and their house goes into foreclosure. And that brings the housing market down. This is how the housing market is going to literally get destroyed. Now, real estate's getting destroyed in general. Commercial real estate's in a lot of trouble because interest rates are going up and they cannot get the refinancing for the commercial real estate. So that's coming down really fast. I think you're going to get probably 80% off in a lot of high-rise office buildings, a lot of shopping centers. Notice the vacancies. And the ones that are in there, they're not even paying their mortgage, their rent to the landlord of the shopping center. So how's the landlord making his mortgage payment? A lot of them are not. So these shopping centers are going to be for sale. The office buildings are going to be for sale. And a lot of houses are going to be for sale because a lot of people are going to lose their jobs when the zombie companies go away. And the zombie companies are starting to go away. They're getting in trouble. And you see that by their stock price. Their stock price is going from $100, $80, $60, $40, 20, 10, 5. I mean, there's a lot of companies that have already gone from over $100 and now they're in single digits because they're zombie companies. They don't make money. They have a bad business model. And a lot of these companies, they have to start with the layoffs. Now, what's fascinating is who's getting laid off, right? Okay, is it white-collar workers or blue-collar workers? Now, blue-collar workers are the people that actually do the work. They do the jobs. They manufacture things. They build the cars at Tesla. Those people, they're going to need people to still build the cars. But what about upper management level? A lot of the white-collar jobs are going away. Look at companies like Coinbase, companies like Robinhood. They hired thousands and thousands of people, but these were white-collar jobs. And the white-collar jobs, they kind of just sit around and manage each other. Now, I'm oversimplifying. I'm not making fun of anybody, but it is kind of funny. But anyways, these white-collar jobs are going to go away. And they're the high-paying jobs. They're not the $15 an hour job. Look, if you have a $15 an hour job here where I live, you do not live indoors. I mean, you just don't have a place to live. Matter of fact, one of my good friends I'm seeing tomorrow, he works at Tesla. He lives in his van. He just can't afford rent. He says, Mike, if I want to eat, I can't live indoors. And, he's a little better than 15 at Tesla, probably 20-something an hour, but he's a worker. He's a blue collar. He's not in the white collar management level. Those white collar jobs are going to go away. away, and they're the ones that own the houses, right? Now, if they don't have a job, how do they make the mortgage payment? They don't. They don't make the mortgage payment. That's the problem. That's where it's going to change, and that's where the housing market is going to be destroyed. I'm telling you, foreclosures are coming on the market. Now, yeah, a lot of these companies, a lot of these zombie companies, not all 40% of these companies are going to go out of business. They could, and I mean, that would be just devastating, but no, they're not. Let's say 10% of them go out of business. So that's going to be devastating to the market. The market will have a big crash, but the housing market, a lot of these people, they can't pay their mortgage. They just can't. So yes, they have equity in the property, so they can still try to sell it on the open market. But that equity is vanishing really quick. It's getting destroyed. It's going down and down. Why? Because people can't afford the homes at these prices, not with the interest rates jumping from 3% to 6%. So they cannot get the homes sold in time. So they actually go back to the bank, go into foreclosure, and then the market starts to come down on its own. It's a natural process. Now, of course, not in your area. Everybody has a job in your area. I was just talking to my buddy, we live in the Bay Area, Mike. Houses can never go down here because we're in the Bay Area. All the jobs are right here. Well, I got news for you. A lot of those jobs are going away. A lot of the zombie companies are actually in the Bay Area where I live, and I do anticipate a lot of layoffs coming. They're already starting to happen, and these are the white-collar layoffs. The white-collar people are getting laid off, and these are the ones that aren't going to be able to make their mortgage payment. These are the ones that are going to be foreclosed upon. These are the ones that are going to bring down the house price because they're going to sell. Billy Bob got out up here, next guy down here, next guy down here, next guy down here. It's a stair-step process. Yeah, it's going to take a little time to play out, but as they continue to raise rates, something's going to break, and what's going to break are these zombie companies, and these zombie companies are going to fold up shop. They're going to go out of business because they can't get money. No one will give them money. They have too much debt and they don't make any money. They've never made any money. They never will make any money, and they're going to go away. It's just that simple. That's the way it works. Now, anyways, I got carried away today. I know that, but the stock market next week's going to be interesting. If you like this rant, give me the thumbs up and hit the subscribe button. We can talk next week again. Get out there, everybody. Have a great weekend. I'm Tall Mike. Bye-bye now.